Peer-to-peer or P2P lending is a mechanism which connects individuals in need of credit with others willing to lend. This practice cuts out the financial institution as the middleman. The P2P lending companies often offer their services online and more cheaply than traditional financial institutions. This helps lenders earn higher returns compared to savings and investment products offered by banks, while borrowers can borrow money at lower interest rates. The P2P lending websites connect borrowers to lenders. First, an investor opens an account with the site and deposits a sum of money to be disbursed in loans. The loan applicant posts a financial profile, which is then assigned a risk category that determines the interest rate the applicant will pay. The loan applicant can then review offers and accept one. The monthly payments and money transfers are handled through the platform. The process can be entirely automated, or lenders and borrowers can choose to haggle. In India, peer-to-peer lending is regulated by the Reserve Bank of India. In 2017, the RBI published a consultation paper on regulating P2P lending and the final guidelines were released. In 2016, there were around 30 peer-to-peer lending platforms in India. Even with a first-mover advantage, many sites could not gain market share and grow their user base, possibly due to the reserved nature of the Indian investors or lack of awareness of this type of debt financing. However, P2P lending platforms in India are helping a huge section of borrowers who have been rejected or have failed to qualify for a loan from banks. As of August 31, 2019, as many as 19 companies have been granted licenses by the RBI. Peer-to-peer lending is riskier than a savings account or certificate of deposit, but the interest rates are much higher. This is because those who invest in a peer-to-peer lending site assume most of the risk that banks or other financial institutions normally assume. In 2022, the global peer-to-peer lending market was worth $134.35 billion. This figure is projected to reach $705.81 billion by 2030. The easiest way to invest in P2P lending is to make an account on a P2P lending site and lend money to borrowers. The sites allow the lender to choose the profile of their borrowers, so they can choose high risk or high returns or more modest returns. Many P2P lending sites are public companies, so one can also invest in them by buying their stock. In many countries, soliciting investments from the general public is considered illegal. Crowdsourcing arrangements in which people contribute money in exchange for potential profits are considered to be securities. Securities offered by the US peer-to-peer lenders are registered with and regulated by the Securities and Exchange Commission. In 2016, the New York State sent warning letters to 28 peer-to-peer lenders to obtain a license to operate unless they immediately complied with responses to demands to disclose their lending practices and products available in the state.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.